Hey everyone, welcome to this month's update. It's November 2022 and there's so much going on in housing, there's so much going on with the economy, and I want to give you a quick update on what's happening macro level, and then we'll move into what's happening here in Orange County on a local level. So right now there's kind of a tug of war between supply and demand, and they're both at very low points. We'll get into the numbers of both, like when we get into Orange County specifically, but you know, really, like, it's very low supply, very low demand across the board, and that's kind of plateaued pricing. There's not much of a change. Prices are not going up, they're not going down, nothing significant. Now, there are sub-markets or specific areas that are seeing more of an increase or more of a decrease than others, but right now, there's not much of a change in pricing. It's trending down. So if anything, especially as the interest rates continue to go up, I think that will put more pressure on pricing, and it will go down in some areas, more so than others, but it's not that significant. We're not seeing 10%, 20% drops like some people are, you know, or some headlines are saying on the internet. Interest rates are now hovering around the 7%, which is, you know, very high compared to what we had earlier this year. But if you compare it to history in general, it's pretty average. So interest rates are expected to continue to go up, but here's the good news. And when I say they're going to go up, they're going to go up this year. But the good news is, with recessions, and it does seem that, you know, depending who you ask and what the definition of recession they use, we're either in a recession or we're heading into a recession. But I think for the most part, people agree that a recession is either we're in it or we're heading into it. And the good news is interest rates tend to go down with recession. So we will start seeing interest rates go down next year. And the other thing is, when inflation goes down, that's when also interest rates will go down. And the Fed is doing everything they're doing right now to fight inflation, which the effects of that will start, we'll start seeing that. So as inflation goes down, as we head into a recession, the interest rates will drop. And this will stimulate the market a bit more. So with that being said, Zillow came up with an interesting study recently, and they looked at lots of MSAs. MSAs stand for Metropolitan Statistical Area. So it's a pretty large area. It's not just the city. It's a pretty large area. They looked at a bunch of those across the hundreds, not a bunch, but like hundreds of those across the US. And from those, 618 MSAs will see appreciation heading into 2023. 257 will see depreciation. So there's more than double the number of areas in the US that will see appreciation in 2023. And then 257 will see some sort of depreciation. Now, let's see what they came up with in terms of the percentages for those depreciating areas, MSAs. 227 of them will depreciate between 0 to 3%. So, and that leaves 30 MSAs that will depreciate more than 3%. So really, when you see the headlines and all the fear-mongering going on, yes, there are some areas that will depreciate. Yes, there are some prices that are going down in some areas, but it's not the level of, it's not 2008, it's not the level and the fear that the media spins into their narrative. So just look at the facts, focus on these, and when you see that, you know, of all the areas in the US, 600 plus are appreciating, less than, 250 are depreciating, but, you know, it's less than 3%. So it's not majorly significant. So that's just something to keep in mind. Now, let's look into Orange County and what's happening here. Really, as I said in the beginning, it's the battle of supply and demand, and we will see what prevails. And it comes down to, you know, some sellers are more motivated than others, and that, you know, tends to create bad comps in terms of prices. But overall, we're seeing prices as pretty stable in most areas. Pretty stable, not a big shift up or down. To be determined as the situation keeps developing with interest rates going up. We'll see how that continues to affect pricing, but it's definitely taken a hit on affordability. Affordability is, you know, compared to last year, previous year, even pre-pandemic, we've been taking a hit on affordability. So hopefully heading into next year when the interest rates start going down again, trending down, that allows more people to be able to afford more in this market. Right now we're hovering about 3,500 homes on the market. That's pretty flat for the past 4 weeks. And typically at this time of year, the inventory is trending down. The reason it's not trending down is, yes, there are less listings coming on the market, but the listings are taking longer. So the line is pretty flat in terms of inventory. Demand is down, and it will continue to drop, which is normal for this time of year also. It happens every year. But this year also more so because of the affordability and because of the rates and because of all the fears about the recession and everything going on with the economy. So low supply, low demand, and what's not low is the days on market. These have gone up quite significantly this year. Now, if you're looking at this chart, the average in Orange County is between 1 to 1.5 million price point. These homes were selling in 19-20 days last year, and then this year they're taking over 70 days. So what this tells you is 70 days is a balanced market. 19 days is an extreme seller's market. If things are selling in 19 days, or the average, it means that sellers basically, they can do whatever they want. They can price it wherever they want. They can ask for anything. It's free for all. 70 days is a balanced market. So there's some real negotiation going on between buyers and sellers. No one has a clear advantage. It's a healthy market also. So with that being said, if you're a buyer, there are some good opportunities. There are not much to choose from, but if you like something, you're not competing with multiple people, you have all your contingencies, you're able to negotiate on price, you know, get things that are good to your advantage. And then if you're a seller, my God, pricing, I cannot stress it enough. Pricing matters more than anything. And the condition of the property also, you know, is a big factor, but pricing really is key. Working with someone that will determine the right pricing for you, having a real marketing plan, and you know that lasts beyond 7 days is really crucial. So if you are in the market, or if you have any more questions about the market, we're always happy to help. And until next time.